one more Stable Talks episode. Here I am with a guy that I admire a lot, Josh from ParaFi. How's it going, Josh?
Good, good and you. Great to be here.
Yeah, of course. So, first of all, as I always say, every episode, like nothing that we say here is a financial advice. So, we don't recommend investments. So, it's only a conversation, thinking about market analysis and all of the personal opinions of each of us. So, any of these personal opinions necessarily relate to any of the companies that we represent. So, don't necessarily it is a financial advice. Okay. Like first of all, really happy to talk to you, Josh. We have been like talking for quite a while right now. I really admire you and ParaFi Capital for the work what you guys are doing. Most likely, people that are more into the stablecoin space and they actually the crypto space uh, will most likely know ParaFi, but not necessarily know Josh. So, like first of all, well, we'd love for you to give you like a general introduction of yourself and ParaFi, especially since we have a great presence in the Brazilian market that necessarily is used to ParaFi.
No, that would be great, and I appreciate the kind words. So I'm on the investment team at ParaFi Capital. We're a multi-strat firm focused solely on the crypto and blockchain space. We invest in tokens, in private companies and public companies, and we've been doing this for a long time, basically since 2018. Um, of course, stablecoins are a massive part of the crypto space. I would argue the highest product market fit category. But since we've been in it for so long, we've seen stablecoins evolve through many different versions, and we're very excited because back when we started in this category, things were a lot smaller, a lot more complex. People weren't as trustworthy in terms of or the trust towards stablecoins, and things have improved tremendously. So we're really excited. Um, I personally have spent a good amount of my time at ParaFi building out our payments thesis as well as our LATAM coverage. As you know, I actually lived in LATAM for 8 years. Have a great love for the region, and I believe a good amount of companies will come out of that region that really harness the power of stablecoins to build better financial products. So we're very excited at ParaFi to kind of get further stuck in the region. We travel there quite often. And yeah, really excited for our conversation today.
Yeah, 100%. And like just to kick things off, like of course, you are a person that me personally, we have have been talking for quite a while. So we have been exchanging some insights in the market, all those things. But one thing that made me really caught my attention, and it actually caught up the attention of the whole market, was the article that you posted regarding the full crux of the stablecoin usage and utility. And basically, the whole thesis that you put out in your article is that stablecoins really shine on B2B cross-border payments. So I would love to kick things off. Like, why did you come with this idea? And like, can you explain to us what was the rationale that you basically thought about to reach this opinion?
No, it's a great question. So you know, by virtue of building out this payments thesis with the team, we went through a very long process of meeting with many founders and operators, speaking with businesses in different parts of the world that deal with cross-border payment flows, speaking with folks on the regulatory side, traveling to different countries. I went to Brazil last year and spent time with you and a lot of other smart people working in this category. So a very comprehensive process. And part of my goal throughout this process was to really find what our 10x plus opportunity is. And what I mean by that is where can stablecoins and crypto realize a 10x better experience than the current payment options available? And so I kind of want you to think of crypto, the blockchain space, as one large startup. We have, some of the smartest and most talented people in the world. We have capital, we have resources. Where can we come together and really direct our efforts? And our hypothesis is cross-border B2B payments is a phenomenal target to go after. Before I do that, I do want to quickly pay homage to the fact that in the C2C space, stablecoins have already realized tremendous impact. I mean, you're seeing exponential growth. I think there's like 230 million digital wallets that have touched a stablecoin in the last 12 months. I think 50% roughly of the US Mexico remittance corridor, which was 66 billion in 2023, runs through stablecoins. And that, in fact, is about to get much larger given some of the projects in the pipeline. So that's all to say there's tremendous impact in the C2C use case as well. And we spent a lot of time there. But for our conversation today, it's going to be the B2B. And so why cross-border B2B? I think, putting my investor hat on, first starting with the addressable market, this is a massive market. I think there's, 2023, we saw roughly like 150 trillion to around 190 trillion in volume settled, depending on what sources you use. And B2B use cases out of that volume comprise roughly 39 trillion to upwards of 150 trillion, depending how you categorize it, of that volume. So extremely healthy in size. And of course, it's only growing. It's growing materially, largely driven by internet facilitated commerce. And with this economic size, so we know there's something big for us to go after, it's actually paired with a significant margin for improvement. If you look at analysis done by Swift and UBS, the average cross-border B2B transaction can take anywhere from 2 to 5 days to settle and can cost from 4 to 6% of the transaction, which is crazy to think about in a day and age when we have AI, we have software, we're really trying to eke out costs out of everything. The arguably one of the largest economic zones of activity is still extremely inefficient. So we're pretty
I would
excited
say.
about the massive opportunity and the current pain experienced in these B2B cross-border corridors.
Yeah, 100%. And this is something that is crazy, especially now that you have like Pix in Brazil or Spain, Mexico, or these instant payment systems where locally, like especially in Brazil, we always say that we don't necessarily in the crypto space in Brazil is pretty specific because like most of the time before this whole stablecoin hype, people were talking about blockchain for payments in other places of the world, and we in Brazil was like, why would we need crypto? Because we already have Pix. So
Yeah.
locally is not a problem, right? In Brazil, we're pretty much more focused on blockchain for RWA tokenization. But since this whole cross-border stablecoin movement came out, now Brazil is really one of the main places where we have been seeing the usage of stablecoins for cross-border B2B payments, which is pretty exciting. We have been seeing a lot of importers and explorers starting to accept the stablecoins or wanted to explore the possibility of receiving payments on stablecoins, especially in more exotic corridors like Brazil to China, Brazil to other Latin countries where we don't necessarily have a like you mentioned like an efficient traditional corridor like that we have today. So this has been pretty exciting and something that we are following pretty close. Especially Brazil, thinking about stablecoins right now, we are going through the whole regulation of the ecosystem. So the central bank is now regulating both VASPs and stablecoin effects. So this is something that we are, really close to see what will come from this regulation. But the main thing is like now the space, even the more conservative players are now at least wanting to understand how it works
Yeah.
and starting to do the famous POCs. So like an exciting time to be building because now the space will really boom, especially after we have the regulation in place, right? And the next thing that I would like to explore to you, and even like in the same topic right here, is where have you been seeing the most adoption of B2B cross-border payments using stablecoins? Like there is a specific region or a specific use case or a specific vertical, a specific company size. Like how can you share some insights about this topic with us?
Yeah, no, I think it's a great question. And if you had to say very, very concisely where we're seeing it, I generally is export import businesses in developing markets, because the cross-border B2B landscape is very uneven. So if you unpack that 4 to 6% in the 2 to 5 days, if we're talking US to UK corridor, Fortune 100 business to a FTSE 100 business, it's going to be a really seamless payment. But if we're looking at a Brazilian supplier of certain industrial parts that ships to Southeast Asia, that's where you see maybe even 5 to 7 days, especially if there's a weekend. So it's the concentration of that pain mixed with the general proclivity to want to embrace technology that makes a region like LATAM phenomenal, where you have a younger population in general that grew up on mobile payments. You have regulatory regimes that are like Brazil that are much more open towards embracing blockchain technology and what we call digital payments. And you have people that experiencing on average a lot more pain, just because these have been the markets where access to the basic financial primitives have been uneven. They've tended to favor kind of the national favorites, not the long tail of businesses. The banking system in some Latin countries is still very outdated, where fees can be much higher than the 4 to 6%. And so it kind of gets to that mix of, opportunity set, some of the societal demographics, and the pain that drives generally what we see as export import businesses that engage cross border. But I think it could be helpful. Why do these problems exist in the general kind of setting? And I think as entrepreneurs or investors, the best thing you can do is you have to study history first to then know where we are today and why stablecoins are so much better. And the big name, the target is Swift, right? We've all talked about Swift. What really is it? It's just a cooperative of banks and financial institutions that are there to standardize international payments. And it's basically a financial messaging layer. It was started in the 70s. It actually replaced an even worse system called Telex, which had like a lot of failed transactions and security issues. But now Swift is 50 years plus old. This looks a lot like Telex. So why is Swift not working for that Brazilian firm we discussed, or perhaps it's a French e-commerce firm shipping to somewhere in Africa? The reason why is Swift is this messaging layer, but beneath it is the correspondent banking system, which can have multiple banks in the middle. So you have the bank that represents the company selling the products, the bank that's accepting the payment on the other side. So basically you have two end banks, but in the middle you have what are called correspondent banks, which are basically international counterparts that provide local accounts and they settle the different currencies themselves. And depending on the currency, the corridor, the complexity, there can be a number of different banks and fees involved. And so it's the design of the system, especially for developing markets, where you start to see that settlement time and those costs really, really increase. And what is driving that? There's direct costs. So there's, Swift costs a little bit, but it's more so the treasury operations, the compliance, the liquidity. That's around 75% of the average cost. FX can be 25%. It can be a lot more in the long tail of currency corridors. But the big one to talk about today, I believe, is capital inefficiency. So, to make money move, there's actually a lot of money stuck in the system. That's kind of the very, Eli 5 way of saying it. And the way the architecture of Swift works is first of all, you have liquidity fragmentation. So there's all these different correspondent banking pools. The sending bank has to kind of have capital in there to be able to send fast and then wait and then kind of be able to lock on your capital. The intermediary banks have to do similar operations as well. So this is all building up an opportunity cost of capital, because they could be investing at minimum treasuries. And then you actually have the two businesses, they have their own kind of working capital issues, right? So if I'm the entity that is selling a good and I ship my goods and I'm only getting my money in 7 days, that money has a financial cost to it, because I could get that in day zero and invest it in treasuries, or now I have to maybe take out financing because I need to pay someone, so I'm paying that cost of capital. I also may have to hedge it, which is another cost. So all this inefficiency is building up. And what's beautiful about stablecoins is they're instant settlement. They're 365 days, 7 days a week, 24 hours. They're accessible online, they're programmable, and you don't have to worry about all this kind of stuck capital in the system. And so when we go back to what are the businesses that benefit from this, it tends to be, especially those that are selling goods to other businesses, and they have that lag period. which could also actually have a risk of a failed payment too, which is the worst because you sold a good, you don't get money back, you have to go through a whole fraud process. So I think those are the businesses where we've seen traction to date. But as we'll get into later, I'm sure it's not being nearly as much traction as possible because there's a couple of friction points in liquidity, in regulation that have kept the potential of stablecoins a little bottled up for the time being.
Yeah, and I think you already gave me the point here to two questions that I wanted to ask you. I'll leave the best one for the second. Like I think talking about regulation, right? So we are now in the middle of a whole process. Major markets are now either thinking about or already regulating this space. We had the MiCA going on in Europe. Now the US is pushing forward all these aspects too. And it's not that easy, right, for a stablecoin company that wants to go global. How to navigate all of these different scenarios? How can they be prepared? So I'd love to hear from you. Like, how are you seeing companies navigate these spaces?
Yeah, no, it's a great question. Unlike money in some ways are marketplaces as well, but unlike e-commerce, money is a very sensitive product to move around, um, especially with AML concerns, post a lot of terrorist incidents, and assessing how that terrorism was funded. We added a lot of regulation to inspect and prohibit and restrict the movement of money for protective and national interests. And you add capital controls to that as well. It's a very difficult good to move around. And then you add the fact that stablecoin regulation is still not set, it makes it a little more difficult. But what the best entrepreneurs do is they take a thoughtful yet efficient approach to this. I believe you have to respect AML, KYC, and there's actually some great businesses being built and growing that are helping do this in a frictionless way. Like one of them is actually Nota Bene. It's travel rule compliance, where you have to know the party that you're sending your stable coins to, and they have built this basically like VisaNet equivalent system where in an automated way, you're checking the endpoint of your receiver, knowing that they have whatever KYC information you need, and that kind of process is then tick the box, and then the payment through stablecoins can go through, and they've been scaling pretty rapidly. So there's businesses like those. There's of course the Chainalyses of the world, which are spending a lot more time in LATAM and on stablecoins now because they see this as a $1 trillion plus market, which I think it is, on figuring out what are the wallets that you're interacting with? How many hops away are they from having engaged with questionable money? So there's a lot of great work being done to leverage the transparency of the blockchain. Blockchains are actually very transparent and in some ways a better, a more regulatory friendly version of money. And they're kind of utilizing this to make sure that stablecoins are moving in a compliant manner. So there's ways to engage with these types of companies as a stablecoin business founder. The second one is working with the right banks, especially under the quote unquote choke point 2.0 era. There was a lot of difficulty working with US based banks, but some of them were much more friendly and innovation prone. So finding the right people, the champions, the right banks is critical because that gives you access, at least in the US, to the financial system. And what's been great is I think as this administration continues to enable, this US administration continues to enable pro stablecoin legislation and actions, you're going to see more banks open up. You're going to see the Fed open up to it. And so that should become easier over time. So I think first is compliance. Second is the right banking partners. But third, I think is also being willing to be efficient and move fast within the constraints of what is possible too, right? Like if you read Elon Musk's biography, the Isaacson one, his mode of processing is like, why did this exist? Like, why do we need to do this way? Why? And if you get to the bottom and there's no real reason, then you do it more efficiently. And I think there's a lot of great stablecoin founders that have found ways to still legally like do things in a much more streamlined manner. Whereas banks can't even think that way because they don't operate off the same first principles. Like when you start with a stablecoin as your core foundation, it really opens up the aperture of what you can do. And so taking that liberty to maybe take a little more risk and use the programmability of stablecoins or the accessibility of stablecoins to your advantage is, I think, the third way I would kind of blend it with compliance and banking relationships. But where I've seen founders spend the most time on from a regulatory risk perspective is on building the compliance functionality and on banking relationships, especially over the last 4 years. Those were the two largest buckets. And I think, why companies like Bridge developed an advantage is because they did those really well.
100%, I totally agree. And talking about banking relationships, as you know, most people know, we are backed by BTG Pactual here in the region, and they have been pushing this movement really great right here in the region, where they establish a partnership with Circle, and so this helps a lot companies like us to have the whole flow like in house, let's say. But one thing that we always ask both the banks that we talk to and the whole ecosystem is, okay, we are talking about using stablecoins for cross-border payments, okay, but we're still when you look at the landscape of how these cross-border payments are done, you can do either of two options. The first one is what the market has been calling the stablecoin sandwich, where you have like fiat, stablecoin, and fiat again. And the other one is stablecoin settlement, where like the merchant or the end beneficiary accepts to receive the payment in stablecoin in one wallet that either being like a self-custody wallet or a custody wallet in one exchange or a bank or whatever. Uh, since, of course, the majority of the ecosystem right now still relies on the financial system, the traditional financial system, most of these cross-border payments have been done through the stablecoin sandwich. So you actually need one bank relationship and liquidity to on-ramp from the source local currency, and the same for the target currency. So you are doing like a cross-border payment from BRL to euros. You will need to have like this partner to on-ramp from BRL to USDC, let's say, and then to off-ramp from USDC to euros and pay on the euro bank account. And one question that always comes up in our minds is that something that we want to wonder how will be the future is, if we're talking about stablecoins as a, let's say, the first layer of these payment rails, how will it be the future? We will still need to on ramp and off ramp all the time. Will we have like at some point local stablecoins, and we're going to do the on chain do the FX fully on chain? So instead of on ramping and off ramping, I would just do like a swap for a local stablecoin to another local stablecoin. So curious to have your opinion on that. How do you envision the future of this whole stablecoin powered FX?
No, it's a great question. I, and double clicking more into it, I think there's a couple of friction points that so stable coins technically are instant settlements, minimal cost, and accessible, around the world with an internet connection and 24/7, 365. But that's kind of the theoretical potential. Today's realistic kind of setup is worse. And why is it worse? Well, there's a couple of reasons, but the ones that you alluded to are on off ramping, mainly off ramping actually, and kind of regulatory liquidity. So we discussed regulatory for a bit. We can do that later more, but liquidity and on and off ramp are critical issues that we need to tackle as an industry today. Like if I try to do a 10 million USDC cross border B2B transaction with most Latam corridors, you're going to eat up the full liquidity on the order book, and you're going to have to use some type of liquidity partner or OTC desk, which then is going to add a spread. It's more opaque. So you start bringing in the same issues as before. So there's a liquidity issue, and then off ramping. There's an issue as well, right? Because if I send you, USDC, USDT on whatever your favorite blockchain network is, you get it like this, but you need to pay your suppliers or employees in pesos or reais. Like, now you have to offboard, and let's say the banks are closed in the country that you're in over the weekend, so now you wait 3 more days, and you start bringing in the same problems that we're trying to kick out before. So there's these issues. I believe that we are going to solve. And then, sorry, one other issue is forex too, right? As you mentioned, do we have on-chain FX? Today, there's actually a big problem in the FX market called like settlement risk. So if I send you money and then this intermediary is going to send that money to the end receiver. There's like two legs of the transaction. And because of all the delays and like broken parts of our system, roughly like 2.2 trillion every day is at risk of not being settled correctly, which is pretty insane. What's cool about using blockchain technology is there's instant settlement, so you actually drive down that risk. But anyways, so liquidity and off ramp are our two problems. I think we will solve them. And how are we going to do that? Well, there's a couple key things that are going to happen, key developments that are going to happen, which will unlock that. The first is regulatory. Because if you allow banks, which have tremendous liquidity, and other types of FIs to engage thoughtfully with stablecoins, they can be the liquidity provider of that offboarding example. So if let's say you run a business in Uruguay, I send you, thanks for sending me this industrial equipment. I'm going to send you 20 million in on USDC. You can receive that with a local banking partner, and since they're the main banking partner, they can go and effectively change it to local currency with a lot less spread because they have the majority of the liquidity. And what's very critical to enabling that in the US is what we now call the Genius Act, which is basically the main form of stablecoin regulation. It's a bipartisan bill with strong support. It's actually coming, it could come as close as this summer in terms of passing, which is really exciting. And what this does is just materially increases the capital that can flow into stablecoins, because now you have some of the largest financial institutions in the world that can provide liquidity internationally and domestically in the US, because they now know what the means of operating are, which before we didn't really know. Like you've even seen banks like Bank of America say, if you give me the legislation, we'll go do stablecoin payments. So with the right regulatory framework, several players will directly open up their capital pools, and you start to solve that liquidity issue. Now, one other kind of important topic that doesn't get discussed that much in our industry, and you mentioned it earlier with PIX, is real-time payments, RTP. RTP is a phenomenal kind of sector on its own that, again, we don't study enough, because it just, for some reason or not, maybe it's a little too competitive with stablecoins. Like if you think about RTP, it's also instant. It's supposed to be more accessible. But where RTP does a great job is domestically, because RTP tends to be a partnership generally with the governments. You have like PIX in Brazil, UPI in India, and these domestic payments are carried out digitally and settled within seconds. You actually have today, I think, like 80 plus RTP systems operating in the world, and they accounted for 18% of all electronic payments in 2022. So it's actually it's a more mature industry than stablecoins are. But what I try to tell people is, look, while they are similar to stablecoins, RTP does a phenomenal job domestically. The kind of bilateral corridors between RTP systems doesn't work well at all. And that's where stablecoins effectively form this international bridge for RTP systems. And why do I bring this up with your question? Well, if you envision a world where the RTP systems like programmatically plug into stablecoins, you now can have a pure cross-border instant settlement where I go, from call it local RTP system like UPI in India, and then it's routed through stablecoin to Brazil, and it off ramps into PIX. You can now have, like, in a matter of less than a minute, I can send a large amount of money. So regulatory will help solve a lot of the liquidity issues that we have today, where, again, small kind of 5 million packets can eat up order books. And then RTP, I believe, is a great way to solve some of the off-ramping issues. But I think the North Star is becoming a closed loop system, right? It's going from the sandwich to pure stablecoin. And there's a great analogy that a founder and friend of mine gave me, which is Skype. So Skype in the early days allowed, basically for voice over internet protocol calls, but because it was new, you generally had one user that had Skype, and then the other user was, their mom in another country. So let's say I wanted to call my mother back in South Africa. I go use Skype on my desktop, and it connects to the local phone system. So it still had half of the old system and some of the new, and it was still a little more expensive. You actually had to pay to use that. But what happened is, as more people started using Skype, they started getting on the system, and then eventually you had like full VoIP between all different calls. And that's when the costs truly came down because it became closed loop. So stablecoins will have their own Skype moment over the next several years where eventually businesses will be paying their costs in stablecoins and receiving their revenues in stablecoins. So you can just settle fully stablecoin to stablecoin. And you have, companies like Visa betting on this already with their own stablecoin settlement. So I think it'll come sooner than most people expect. But that truly is the North Star, because if all the counterparties are on the stablecoin network, that's when you get as close as possible to that theoretical, instant settlement, basically $0 cost, 24/7, 365 world that we want to go to.
I agree 100%. And a lot of the things that we just mentioned is something that we are, pretty close accompanying to see how we will develop. And actually, some things that we have been developing right here. And one thing that, again, it comes out to the fact that envisioning a future where we will reach this closed loop ecosystem, most of the revenue that is generated by stablecoin payment companies now are basically to do on and off ramps, right? So if we reach this ecosystem where it is a closed loop, so you don't necessarily need to own an off ramp, like how do you see these companies navigating this space?
No, it's a great question, and I'll add, the main economic profit pool right now is yield too, right? Underneath companies like yours are the actual issuers, and that itself is being competed against and declining. If you actually look at, what some of the stablecoin operators have to do in the space, is have to share yield to incentivize people, and so that's going down, and rates in U.S. terms will probably be going down as well, especially if you extend your outlook beyond a year. So that pool is getting disrupted too. It's a great question, and I've actually had several traditional investors and even a couple of friends at traditional payment companies kind of bring this up and say, well, if stablecoins are real, like how does anyone make money? And I think the key thing to think about is value-added services. Like we've been through this transition in the internet era, we've been through it in the fintech era. Yes, stablecoins will be the wedge, but you're going to have a lot of phenomenal financial experiences built around stablecoins as that core wedge. I think you're going to have the next generation of Revoluts and new banks be built around stablecoins. Maybe those companies themselves can even move fast enough to do that and become their own disruptor. But you're going to have financial institutions and fintechs where this idea of sending money to your friends and family abroad is for free is kind of the wedge to bring them in, but then you add credit on top, or you add trading and speculation on top, and that's where you're generating fees. So that's kind of one side of it. But the other argument too for companies like yours and others is the unlocks that are going to be provided by stablecoins are going to increase volume so much that even if you're capturing 1/10 or less of what you used to, the volume, more than kind of compensates for that. And there's, I would argue, $1 trillion profit pool out there for global payments. And what essentially stablecoins do, which is a massive unlock, is they increase the velocity of money, right? Because economic value is now being moved and created, and there's this multiplier effect when you increase the velocity. So similar to how the internet advanced consumer purchasing and whole industries of e-commerce, of software as a service kind of came up, stablecoins will do that as well. And my argument is that the GDP of a stablecoin based global financial system is much larger than today. And so these profit pools will grow in terms of absolute value over several years, while the take rates will come down. But I think value-added services is really important to enhancing that, as some traditional financial companies struggle to capture profits on the payment side.
100%, 100%. And one follow-up question regarding the whole like status quo of where we are and where we are heading. I'm actually like for the people that saw the other episode of the podcast, you may have like figured out I'm not in the same scenario because I'm actually in Buenos Aires right now. And one thing that really got me excited about Argentina specifically is that I had been here before, but I was like 12. So it's been like 15 years since I've been here for the last time. And here, like every place, every restaurant, they accept Pix and they accept stablecoins. And this is something that is really like into the daily life of people here. Especially because, of course, right here the situation is more from a wealth protection and access to dollars than necessarily efficiency of the whole ecosystem. But one of the things that we have been seeing in Latam is this like dichotomy, right? You have this whole flow of okay using stablecoin for payments because they are more efficient because you have the B2B side of it. But of course, when you go to the B2C retail use cases, you see this like daily basis usage of stablecoin, which is really exciting because it's something that I don't, I, I'm not that used to seeing Brazil. It's not that I go to a place in Brazil, I say, oh, we can pay with STC. Here it's like signs everywhere. So curious of how you envision this future, right? Since, and again, following up to the same question that we have been discussing, if in the future you won't necessarily need to worry about it is payment using stablecoins or not, or the whole ecosystem will be closed by itself, um, how will we interact with this technology in the future? Will we just pay with dollars, and behind the scenes it will be done through stablecoins? Will the no the society understand that okay, this is a stablecoin and I'm paying this with a stablecoin because I want to pay with the stablecoin, which is basically how are things here in Argentina right now. So just one last question regarding like thinking about the future. How do you see the society interact with this technology if we envision this whole closed loop ecosystem?
No, it's a great question. I think there's a lot of layers to that question. My high level answer is it will be a lot more behind the scenes. I think that's what you need to do, similar to what we did with the internet. Like right now in our ecosystem, we interact with the bare metal a lot, and that's why UX tends to not be that good. I think stablecoins is where you've seen some of the best advances in UX, where you have fintechs using them, but the user just sees USD even as kind of their option. And so my answer is it'll be behind the scenes, it'll be seamless, but it'll unlock not just a lot more volume because of that velocity point I made, but the programmability element of stablecoins is one worth discussing as well. Like these are smart contracts. They're code-based solutions. And now you can unlock a whole universe of new financial primitives. And this is where we start getting into tokenization and real world assets, where your money can pay you real time if you have like more of a direct kind of tokenized treasury solution, where you can program payments to go out at certain times, where you can program credit based off of payments. There's a lot of very interesting opportunities available because what smart contracts are is they're basically Lego blocks, and you can combine them to build all sorts of automated financial solutions that don't exist today, or if they do, they're generally built by intermediaries like brokers that are adding inefficiency and charging you fees. So that's one point is the programmability aspect will create financial and transactions that today we don't even see at scale. You're also going to see the proliferation of micropayments, right? So programmability and micropayments means that entrepreneurs in regions that traditionally didn't have access to a lot of capital markets can now do very interesting things online, and they can do sort of fraction of the cost that are more sized appropriately to their local economies. So economic activity picks up a lot with stablecoins as well. And then I think not to be a bit of a throwing out some big names there, but like AI and stablecoins is a massive opportunity because AI agents, I think, are really going to struggle to operate with the confines of our current financial system, right? Because the authentication methods don't really work well with AI agents. Microtransactions aren't really possible. You can't give them a credit card. It's very weird. So this idea that AI agents can operate on a set of internet-based rails, which is the blockchain, to engage in trillions of transactions at fractions of a cost, fractions of a penny, really makes possible the vision that we have with AI agents being able to do all this economic and commercial activity. So I think that's another future element that's very exciting. And so what does the world look like? Well, it's a world where I have my primary stablecoin based account that is earning me money programmatically through different activities. I'm doing things with my friends, in terms of speculation that are all on the blockchain as well, whether that's prediction markets or trading, and that's programmatic. I have my AI agents that are working and doing parts of my job and financial management on chain because it's automated. It costs basically nothing and it's scalable. And so the world is, behind the scenes, very complex with companies like yours and others navigating all that middle layer between the blockchain and all these parties. But it's one where for the user, it's incredibly augmented in terms of what is possible. So I think businesses and consumers alike will see the aperture of financial transactions and of just economic activity really open up in terms of accessibility and scalability. And that's a very exciting future to want to be part of. And that's why we spend a lot of time on stablecoins. You do as well. So that's how I think about answering your question.
100%, 100%. And I'm pretty excited for this future, to be honest. And I hope to keep building right here and be one of the main players that helps reach this future. But Josh, like, thanks for the conversation. It was amazing. We could like spend 1 more hour here discussing things. Just wanted to really thank you for joining here. The podcast was really exciting to talk to you again. And yeah, if you want to just leave some final words.
Yeah, no, I appreciate your time. I really enjoy speaking about the subject as well. We could go on all day. But if there's just one thing I can say, if you're in fintech, if you're coming out of school, if you are in crypto, or if you're in any other industry, take a serious look into stablecoins. There's a lot of information and material out there where we really benefit from the fact that in the 21st century, the accessibility to information is really high. Take a look into it because I think the potential, obviously both of us are biased, but the potential is really, really large as to the forms of economic activity and financial transactions that this unlocks. And so my only ask is, take a dive, make the time to really learn about this and come and build in our space because we need talented people to make this vision happen. And we're excited at ParaFi to back talented people doing that. So I think we all benefit from having more smart people in the room.
100%. We need help. But yeah, thanks, guys. Appreciate it. You watching this episode, and let's move. Bye bye.